Number 26 we'll be discussing from the exercise on page number 4.43. A, B, C are partners in the ratio 3:2:1 and their balance sheet is given, and certain adjustments are also given. We have to prepare the revaluation account, partners capital account and balance sheet of the reconstituted firm. So let us calculate the sacrifice or gain first of all. The old ratios or the old share of the partners given is 3:2:1. So 3/6, 2/6 and 1/6. And it is given just below the balance, just after the balance sheet, that from 1st April 2015, A, B and C decided to share profits equally. So the new shares are 1/3, 1/3 and 1/3. We took out the difference of these old share and new share. So we got the difference as 1/6, here nil and here minus 1/6. So this shows the gain and this shows the sacrifice. So now goodwill is to be adjusted. If the case of goodwill is there, that will be adjusted in this ratio. Goodwill of the firm be valued at 1,50,000. 1,50,000 is the goodwill given, and for sacrifice or gain we'll be adjusting that. So 1/6 of 1,50,000, that comes out to be 25,000. So what will be the journal entry passed for this one? That is gaining partners capital account debit to sacrificing partners capital account. And who is the gaining partner? Here it is C, and who is the sacrificing partner? It is A. So 25,000 are the amount. Now let us prepare the revaluation account. As we know, in the debit side, decrease in assets and increase in liabilities are to be recorded, while in the credit side, decrease in liability and increase in asset will be recorded. And this information we are going to, for decrease and increase, we are going to get the information from the adjustment. It is given in the second adjustment, land will be revalued at 80,000. So what is the value of land in the balance sheet? 50,000, and in the adjustment it is given it will be revalued at 80,000. Now it is to be valued at 80,000. So what is the increase? We find the increase in land by 30,000. Likewise for building, it is to be depreciated by 6%. So 3,000 we are getting the amount, and creditors of rupees 6,000 are not likely to be claimed and hence should be written off. So there is decrease in one of the liability, that is creditors, since they are not going to claim for rupees 6,000. Now again total it, 36 minus 3,000. So we are getting 33,000 as the profit. If it would be, the difference would be in the credit side, that is the loss, but here it is coming in the debit side, so that is the profit, and that will be transferred to the partners capital account in their old profit sharing ratio. So the amount comes out to be 16,500, 11,000, 5,500. Now let us prepare partners capital account. It is important to remember that the partners capital account, the partners capital account will start with the given balances of capital, and in the balance sheet these balances are given as 1 lakh, then 50,000 and then 25,000. We have the share of profits from the revaluation account, which was in the debit side. In the credit side of the partners capital account it will come, so that is 16,500, 11,000 and 5,500 from the revaluation account. If it would be loss, that would go in the debit side. Then general reserve is given in the balance sheet. So again this general reserve is to be distributed in the old profit sharing ratio. And one more entry we discussed in the beginning for goodwill, 1/6 share that was coming, 25,000. We pass the journal entry, gaining partners capital account debit to sacrificing partners capital account. Since it is A and it is being affected by C, so amount will be written in C's column. And here it is written C, it was being affected by A, so in A's column we have written the amount. Add up all the values and deduct if any items are in the debit side, then we will get the difference, and that will be the balance of the partners capital to be taken to the balance sheet. Now come to balance sheet, liability side, asset side. Now whatever the new values are there, we need to bring that, or we have to write in the new balance sheet. This is the balance sheet of the reconstituted firm. So all the new values will come. Land 80,000 it was given to be valued at 80,000. Building was to be depreciated or decreased. Since it was 50,000 minus 3,000 was the depreciation to be charged. So 47,000 I have written. Rest all it did not change. So I have written all that as it is in the previous balance sheet. Creditors 50,000 and 6,000 are not going to claim. So deducted that 44,000. Bills payable 20,000 and the new capital balances are 156,500 for A. For B it is 71,000 and C 10,500. Adding up both the sides we get as 3,02,000, 3,02,000. Balance sheet matched, it means it is correct.